I think we'll make a start now. I know there's a few more people still to arrive based on the original registrations, but they can join us as we go. So really warm welcome to our webinar this afternoon. My name is Marika. I work at Unlimited and I look after our mentoring and pro bono support. So all of the additional support that Unlimited provides in addition to the support our staff directly provide, and of course the cash grants that we give. So as part of that support, we have access to mentors, and then we also organize webinars like this, which we're really pleased to keep open and allow access to anyone. So you don't have to be an Unlimited Award winner, but you're very welcome to listen to if you are a startup social entrepreneur of any kind or just interested in this space. So really pleased to have everyone online who's logged in. We've been running webinars for a couple of years now, and this is actually our first one of 2015. So we're just starting our spring webinar series, and I will follow up after with dates for further topics and further webinars in case those will be of interest as well. Pleased to introduce our host and welcome our host, David Wilston. David is the founder of Green Accountancy, an accountancy firm who specializes in working with social entrepreneurs and charities and also other types of small businesses. David has run webinars for us before, so knows Unlimited and has done some other work with our entrepreneurs as well. So we'll be really well placed to hopefully address any questions that you might have around this topic, around paying people and getting paid. Often entrepreneurs we work with are just at those early stages of thinking about what is that, thinking about employing their first member of staff or engaging freelance people. And the purpose of this webinar is really to look at how to get that right. So how to what do you need to put in place as a startup entrepreneur to ensure that you adhere to all the legislation and regulations and to keep things as simple as possible. So I think that's probably enough. Maybe just a tiny bit of housekeeping. So David will introduce himself. He'll be speaking for about 30 minutes or so to go through the content. Please do post questions through the chat function that you'll see, hopefully. So please do post questions, and we'll address those. We can look at them throughout as well, but we'll definitely have time at the end. We'll have an hour for the whole webinar. We'll see how much we need, 30 minutes, and then as many questions as you have, we'll go through those. I think that's it. So over to you, David, and thank you very much for joining us.
Thank you, Marika, and good afternoon and welcome everyone who's joined the webinar today, and hello to anybody who's listening in at a later date on the recorded session. So to those that are listening in this afternoon, as Marika said, do chip in with any questions and comments as we go through. Although I'll be hosting the webinar and going through the presentation, Marika will be listening in and will be able to interact with me as well. So do ask any questions that come to mind, and we can either address them as we go through or come back to them at the end. My name's David Wilson, as Marika has kindly introduced. My firm, Green Accountancy, specialises in working with social enterprises and sustainability sector businesses and all sorts of charities. And by doing that, we are able to get used to all of the questions that social enterprises, small businesses tend to ask. And particular topic today, paying people and getting paid, is one of the common pitfalls, common problem areas that small businesses and small organisations often have. And this can affect any organisation at all, absolutely right through from most commercial, profit-orientated enterprise through to pure charity. So, and every social enterprise in between those two extremes. So paying people and getting paid is a really important topic. and something that crops up time and time again in my chats and advice with owner-managers of small enterprises. So Green Accountancy make this presentation today. We're obviously able to then connect with anybody, and we'd be happy to have a one-to-one chat either through Skype or phone, or even a meeting on the Impact hubs across London on a regular basis, and we're happy to do that with any of the Unlimited members completely free of charge on a first session for an hour on what we term the Green Accountancy Clinics. So if anybody's interested in those, then do be in touch. So today's session we'll look at specifically employment status, and that's really what the crux of this session is about. Paying people and getting paid is about not to do with paying for goods or selling goods, but buying and selling people's time. So we'll look at employment status and whether those people, whether it's you or somebody you're paying, is actually your employee and the importance of that. We'll look at a set of tax rules known as IR35. We'll speak particularly about directors, and then if we've got past all of those barriers, we may be in a position to pay dividends, and we'll talk about the importance and method of getting dividends right. We'll talk about VAT relatively briefly, but VAT on particular aspects of paying people and getting paid, and then rounding up with barter transactions, and if there's some time left over, we'll look at some of the bookkeeping matters that relate to these kind of subjects. You can see on screen there my email address. As I say, just be in touch at any time. We've got various fact sheets and bookkeeping spreadsheets that are available free of charge. And also, as I said before, you can book a call back or a Skype or a meeting with me. Just go onto our website at www.greenaccountancy.com and click on Book Now. So getting paid for your time. The initial scenario to think about is simply a single person business. Let's assume they're setting up and operating as what might be termed a sole trader. The sole trader is a term that's interchanged often with self-employed or freelance, various terminology, all basically means the same thing. The revenue terminology is to call somebody in that situation self-employed. And that person is then potentially charging for their time for the work they do. Now the work they do could be in any sector. It could be construction, IT, advice, could be more physical processes, could be food industry, could be any sector, whatever. But if somebody's charging for their time, then at some point in the transaction, somebody needs to make a decision as to whether that person is actually acting as an employee or acting as self-employed. Now, if you're charging for your time, then it's actually the person paying you that has to make that decision. It's your customer. So if you operate on a regular basis, and let's say you had a client that wanted you to, I don't know the audience's particular skill set or industry sectors, but let's just say an IT person who was operating and creating somebody's website, then the customer paying for that website has to decide whether they're paying that person on a sole trader or self-employed basis, or is that person actually their employee and the payment is on an employed basis. If the person is employed, then there's going to be a lot more national insurance. National insurance is very important. Often there's more national insurance in the transaction than there is even tax. People often think of national insurance as relatively low key, and it's not mentioned much in political terms compared to tax. However, national insurance on a salary, for example, can be up to 26% when the tax is often 20%. So national insurance is obviously very important. Furthermore, if somebody's actually acting as an employee, then they will potentially have rights and there will be obligations on the person paying to look after that employee, which tend not to apply to a self-employed arrangement. And then the final point of the advantages of the self-employed arrangement would be that the sole trader, self-employed person, has more opportunities to set expenditure, travel expenses, telephone and the like, against their earnings compared to an employee who generally doesn't have much scope to reduce their earnings in that way for a tax point of view. So all in all, relationship of individual doing some work for another business or for another individual, often both parties would prefer that to be arranged as self-employed. We'll come on to how to define whether somebody is an employee or self-employed, but first of all, just want to think of the same type of arrangement, but in effect the other way around. We now think of your social enterprise and your need to pay somebody to do some work for you, and it might be an accountant or bookkeeper doing some work for you, or it might be somebody doing the direct work that your organisation undertakes for its clients. Whatever the situation, if you're paying an individual to do something for you, then again this question of whether they're self-employed or employed arises, and this time if you're the payer, then it's you that needs to make the decision. And getting it wrong can be particularly costly. I've seen cases where a business has paid just a handful of people on a self-employed basis over a few years, and the revenue found that they should have been on an employed basis, and the additional tax, national insurance, penalties and interest run to over £100,000 and basically wipe the business out. Whereas had they got it right from day one, the cost would have been much less. So it's really important to make sure that if you're paying someone and that the person is an individual, then you decide carefully whether that person is self-employed or employed. And you can't just decide to make it self-employed or label it self-employed. Quite often people will say to me, well, the reason that I've thought that this relationship was one of self-employment was because this individual is already registered as self-employed. Well, in a sense, there's no such thing as registering as self-employed. Anybody can go to the revenue and say, I'm now self-employed, and the revenue will dish out a tax reference. The revenue make no checks and no warranties that that's the correct situation. They just simply hand out the tax reference. That does not in any way make that person self-employed or the relationship definitely self-employed. Another thing that people often say to me is that, oh, the person's got other clients and they work in quite a flexible way. Again, that doesn't necessarily mean they're self-employed or their particular relationship is one of self-employment, because an employee can have lots of different jobs, small part-time jobs, and can certainly work on a flexible arrangement. Similarly, employees can potentially work from home or use their own laptops in various scenarios, so none of those particular aspects make somebody self-employed. So what actually is employment? So if we're paying someone, we need to decide, or if we're getting paid, we need to, our person paying us needs to decide whether we're dealing here with an employee. And this picture caught my eye from 100 years ago of a bunch of workers, and immediately I felt these guys were employees of presumably the car business. And what made me think they were employees? Just the whole setting, the fact that they're working in a factory, there's a team of people working there. I doubt very much they're turning up on a self-employed basis. It felt like immediately this was employment. And I think a big part of what it looked like tells us whether somebody is an employee or not. Legally, there's three factors that make somebody an employee. And now, if we try and frame this in terms of if you were paying somebody to do work for you, then we can think about whether that person is your employee by looking at these three factors. These three factors came about from a legal case back in the 60s, but have stuck around ever since, and certainly there's still absolute definitive answer on whether somebody is an employee or not in a certain situation. So that first factor says, can the payer control the methods of work? So this is asking the question, if you're paying somebody to do some work for you, could you tell them exactly how you want them to do it? It doesn't mean to say you actually do tell them, but do you have the right to tell them, this is how we work here, this is what we want you to do? Looking back to the guys working in the factory, I'm sure that's the case. They're not going to turn up and use their own methods. They're going to do the work in the way they've been told to do it. So that's a key plank of employment. The second thing is there any limit or complete bar on what's called substitution? Substitution is basically saying, could I send somebody else? So in my firm, Green Accountancy, if one of the people here can't make it into work, then they simply don't come. They don't send somebody else. We couldn't just have anybody walking off the street and saying, I'd come in place of one of your other workers today. So that's an example, and again, the guys in the factory, they're going to be the individuals that actually have to turn up to do the job. So if it's expected that it's one particular person that turns up to do the work, then that's another key flag of employment. And the third is there an obligation? Technically, this is supposed to be a mutual obligation, so an obligation on both parties. So is there an obligation to turn up and do the work, and is there an obligation to provide work? And that's often evidenced through any kind of notice period. So if you say to somebody, if we're going to stop using you, we'll give you a week's notice, or a day, or a month, whatever, or if they're going to stop doing the work for you, you'd expect some kind of notice period. That implies there is an obligation on both parties to provide and to do the work. And if we have those three factors in place, then that relationship is an employment, regardless of any other factors and facts that may supposedly evidence that it's actually a self-employment situation. If the fact is the payer can control the methods of work, it has to be a particular individual, and there's an obligation to continue doing the work or give some notice to stop doing so, then that is an employment situation. An important factor that the revenue kind of adds to this, which technically wouldn't stand up in law, but the revenue obviously are an important force in all of these equations. In the revenue, look at whether somebody's paid a fixed payment rate. And that could be fixed amount per hour, per day, per month, per year, whatever. If somebody's paid on a fixed amount, regardless of how well or quickly they do the work, then that, according to the revenue, implies an employment situation. The slide there mentions it's risky to rely on one point. What that's really saying is if you said that, for example, this person could send a substitute, it doesn't always have to be that single person, it's risky to say that automatically stops them being an employee. There was an example case where that happened, and the revenue won the case by saying, okay, your contract says you could send a substitute, but in reality it was never going to happen. All of the other points point towards employment, therefore we've got on our hands here an employment case. So that's about employment, but what is self-employment? And again, a little picture caught my eye. This guy's basically saying that his small museum is only open pretty much when he feels like it. And I think that, again, just gives a sense of what self-employment is all about. So technically, self-employment is any relationship between a payer and a worker that is not employment. So we're basically saying that this time the worker can control the methods of work. So if you ask me to prepare a set of accounts, I would be able to choose the methods, software that I use to prepare those accounts, and saying that the worker could provide a substitute, so I could get somebody else from my team to actually prepare the accounts. And it's saying there's no obligation. You could say, actually, change my mind, don't want you to do it, or I could say, I don't want to do these accounts. So that would be a self-employment arrangement. And turning to the revenues kind of criteria, they would look at a situation potentially and say, could the worker gain or lose by doing a good or bad job? So if I said to you, I can prepare accounts and then choose to do them quite quickly, so I'm preparing your accounts at a fixed price, then I can profit or lose depending on how long I take to do the job. So that's kind of, in a nutshell, what self-employment looks like. Now, an important factor that we'll come on to the details of is that a company cannot be an employee. There was an idea some couple of years ago that the rules were going to change in this area, and then the government backed down on it. So, as has always been the case, it's still the case that a company cannot be an employee. Just to recap on employed versus self-employed, if you're getting paid by someone for your time, or you're paying somebody for their time, and it's more than £671 a month, and that figure's important because that's the level at which national insurance starts to apply. If you're paying somebody or getting paid, then employment status needs to be checked. It's the person paying that needs to make the check, and if the payer can control the methods of work, it always has to be the same person with some kind of notice period. We've got an hourly, monthly, or annual kind of pay rate, then they are employed and that has to then be paid through payroll with full pay-as-you-earn and national insurance deductions. In the future, with also pensions applying, which will be a case for all employers and all employees, and also that person will have employment rights. Now, if you then accidentally pay somebody as self-employed when it should be employed, then there's a possibility the revenue would look back on that and say for all of the time that you've paid them, they want the additional national insurance and they want to implement it retrospectively, and that can be extremely costly. Turning on to limited companies, some situations, and some of you might be in this situation, there's actually a limited company effectively inserted in between the person paying and the person actually doing the work. So if you have a limited company and that company says, okay, I'm going to build your website and maintain it on a regular basis, and it's you actually doing the work, then the company is effectively sitting between you and your customer. In that situation, because a company cannot be an employee, then the payer doesn't have to worry. This is the first time that the person paying hasn't had to make this decision. In this scenario, it's actually the company that has to make the decision as to whether there's an employment relationship. Now, this was quite a common scenario, became more common through the 90s, and the government brought in legislation to kind of prevent this being a simple get-out to avoid an employment scenario. And the way they did that is a set of rules formerly known as the intermediaries legislation, but usually referred to as a thing called IR35 because it was released on press release in Line Revenue number 35. The IR35 rules states that the person being paid, the company that's being paid, has to make the decision as to whether that relationship is like employment. If the situation would be employment were it not for the company, then the company has to pay all of its earnings out to the worker through a salary. And in this way, the revenue still get the full national insurance just as if it had been an employment position in the first place. So just to recap, worker works through a limited company, contracts to do work on a regular basis. It would have been an employment situation. Payer pays company with no deductions, no problem whatsoever. The company then has to pay that fund out to the worker through a salary with full national insurance. Now, a limited company is often beneficial, certainly if it's set up as a shares company. It's beneficial from a financial perspective as being able to save national insurance. And the way it does that is to be able to pay out dividends. If the company is in this IR35 thing, then it can't pay out a dividend. But if it can pay out a dividend, then there's certain advantages in doing so. And again, the revenue can look to address that situation by potentially claiming that the dividend is not actually a payment of dividend, but it's actually a payment of salary. So if in your limited company you've decided there's no IR35 problem and you're doing work for your clients and the company's generating money, and you'd like to pay yourself some of that money through dividends, which have no national insurance on them, compared to salary, which has 26% national insurance, then you need to make sure those dividends are paid properly. So we're a happy chap. We've decided we're going to pay out some dividends, and this is the basic procedure for paying out a dividend. Now, anything I'm talking about today, we've got various fact sheets which we can give free of charge that outline all of this in more detail. But just going through the basic points of making sure a dividend cannot be reclassified by the revenue accidentally as a salary. The first thing to do is to make sure that for every dividend that's paid out there is actually a meeting. Even if you're a single person company, you have to have a meeting with yourself and hold that, and call it a directors meeting. In that meeting you have to review the profits of the company, because a company with no profits can't pay a dividend. We then have to print some minutes of the meeting and a voucher. Now that quite sounds quite onerous, but in reality with a spreadsheet template it should take about 2 minutes so far to get to bullet point 3. Make sure your payment of dividends is completely separate from any salaries, so that means actually having it as a separate transaction on your bank account and preferably on your bank statements that showing under reference of dividend, and making sure in your bookkeeping that is posted as a dividend and not a salary. You can pay a dividend without it actually going out of the bank account. It can be credited to your director's loan account. And ideally, you could email us or anybody else, your accountant, as confirmation that you've made that dividend payment, which makes the evidence that you did really intend it to be a dividend at that time and you're not just deciding that at a later date. Having followed those steps and assuming that you don't have A shares, B shares, C shares type scenarios, then there's basically no cases that we're aware of, and we're fully up to speed with the tax press and so on. There's no cases where the revenue have attacked that scenario, as long as you are outside of IR35. Moving on to VAT, keeping in the context of paying people for time and getting paid for your time. Obviously VAT in itself is a vast area, and I don't intend to try and cover it in any sense the basics of VAT, but just specifically on the kind of question of getting paid for your time. The first point to note is that keep an eye on the turnover, and if the turnover exceeds 82,000, the current registration threshold, then you have to register. And that test has to be made on a regular basis, as in every single month, looking back 12 months. Don't just wait until the end of the accounts year. And if there's a group of people working together in one company or in partnership, then the 82,000 still applies to the whole. It's not multiplied up by the number of people. So if there's 2 or 3 people working together, you can quite quickly find that you are exceeding 82,000 turnover. It can also be beneficial to register voluntarily. Any business can register for VAT, but you have to actually be in business. That prevents consumers basically registering for VAT. VAT ultimately is a consumption tax, but unfortunately it also prevents charities sometimes from registering for VAT. But if you are in business, and it doesn't have to be a profit-making business, but it has to be a business, then you can register for VAT voluntarily. And you might want to do that if your customers are VAT registered. The reason for that is those customers won't mind you adding VAT to your invoice because they can claim it back as VAT registered businesses themselves. And then you get the advantage of either being able to claim back the VAT on your costs or use a thing called the flat rate scheme, which can be beneficial and basically means you get to keep some of that VAT that you charge your customers. However, if your customers are largely or entirely non-VAT registered, i.e. individuals or perhaps charities, then you will probably want to avoid VAT registration as long as possible. In that scenario, your customers can't get back the VAT, so in that scenario you want to stay off VAT registration if you can possibly help it. Now sometimes people ask me, is it possible to VAT register as part of my business so that the customers that are VAT registered businesses are charged VAT on, get benefits there, but my customers that are not VAT registered are somehow arranged to not charge VAT. Unfortunately you can't do that. Once you've registered, you've got to charge VAT on all of your sales, and you can't split a business revenue use a mechanism called business aggregation, which brings all businesses that are commonly owned and operated under one roof for VAT purposes. And similarly, you can't avoid the VAT registration threshold by splitting the business into separate sections. A VAT is a charge on supply, so it doesn't matter if you're charging money or not, and we'll come on to barter transactions in a second. But basically, VAT is charged each time you make a supply of services, if you're VAT registered. If you're not VAT registered, because you're under the VAT threshold, then you can just ignore VAT, but that does mean you can't get the VAT back on your costs. And VAT is the responsibility of the person carrying out the work, not paying. So if you're paying somebody else to do some work for you, and you pay for their time, you don't need to worry about whether they're VAT registered or not. If they say they're not, and they're not charging you VAT, and if there's anything wrong with that, it will be their problem, not yours. As long as you're not colluding with somebody to avoid VAT, then you just pay them based on whatever they tell you is the case in terms of VAT. It's entirely the responsibility of the person doing the work and making the charge to charge the correct VAT. Barter transactions, put a warning sign there. Barter transactions are fully taxable. sometimes people still come to me and will say, well, okay, look, we can do some work for you, and you could do our accounts. Would that work? And I say, yeah, it works perfectly well. But that's what would be called a barter transaction, or sometimes a contra transaction. It's perfectly legal, but unfortunately it's taxed exactly the same as we're paying each other. So sometimes individuals might do some work for an organisation like hosting, or maybe spend some time serving within an organisation that provides food and drink, or doing any kind of time-based service, and in return they get from that organisation perhaps a membership, perhaps services that they don't have to pay for because they're getting in return for their time. As I say, that's perfectly legal, but unfortunately both parties are subject to exactly the same tax regime as if they were each being paid for that time and being paid for their services. So the person who's doing the work has to be judged as whether they're potentially an employee, and all of those kind of rules apply. And if there is an employment, then on the payments, then there'll be national insurance and pay as you earn. And the organisation that are providing the services in return for that time has to charge VAT in the normal way if they're VAT registered. So it's important just to bear in mind that barter transactions are just taxed and subject to national insurance and VAT just as normal. So that takes us through all of the presentation about paying people and getting paid. Marika, that seems to have taken the half an hour. Would you like me to briefly show through the bookkeeping transactions on some of this?
Okay, thank you, David. I wonder if people would like to hear about that. I have a couple of questions here, and I also had one question myself. What would maybe if you want to say, what would you show about the bookkeeping, and then people can give me a quick yes or no on the chat whether they'd want to hear about that.
Yeah, sure. Okay, let me just see if I can use the technology to.
Oh, I've got a few yes pleases already here, so maybe we will take a quick look, David.
Is that now on screen, the bookkeeping?
Yes, it is. Yes.
So this is a simple spreadsheet, but it's just a little bit preferable compared to an individual making their own spreadsheet. And that's because as a firm of accountants, we've built this and improved it over a number of years. So it has a little bit of automation built into it. It works really well for sole traders or single person limited companies. If you're getting anything above that group of people, or you've got employees, or you've got retail, for example, situations, then we've got an online bookkeeping system which is a lot more sophisticated. But this system works perfectly well for single person businesses. And I'm just going to fill in some details just on here. And so we would provide this spreadsheet free of charge to anyone, whether you're a client of ours or not. And let's just say we're going to say run from 6th of April 15 through to 5th of April 16, current tax year. And my business type is sole trade. I could fill in my address. And if I had particular types of expenditure that was unique to my particular business, then I could add those types of expenditure there. When I make a sale, I would record the sale on this tab, invoice number 1, let's say the invoice is today's date. And I'm going to prepare some accounts, and I'm going to charge £500 for that. So that's just a simple list. Yes, you could have that exact list in your own spreadsheet, but let's have a look how that affected our income and expenditure account. That's now showing up as a sale for 500. Oops, I think I'm off the screen there. Oh, sorry, technical issue. Microsoft Excel is restarting, I'm being told. Let's try again. Okay, that glitch seemed to last only a few seconds. So we can see so far we're in a situation where we've got a profit of £500. At that point, I haven't been paid anything as sole trader. I've just done some work. Now, I may have a business bank account, or I may just use my personal bank account if I'm a startup sole trader. There's no law requiring you to have a business bank account. But if I've got a business bank account, then let's say Fred paid me, let's say to the date 30th of April, and the money came in, and let's say this was income from customer, and I would simply record that it's income from customer. Now our amounts column is single column rather than debits and credits. We're keeping it simple, and therefore we're saying, okay, money coming in is positive and money going out is negative. So I say, okay, yeah, Fred now paid 500. But let's say on the same date, I travelled to London, and let's see if I can find a heading. I probably should have chosen one nearer the top, but there we go, travel, train, bus and taxis, that kind of thing. And let's say my train bill was £60. I can now look at my summary. We've still got £500 in, although we've had to record it twice because we raised an invoice and then got paid. It's still only one set of £500. But then we can also see the travel cost is showing up there automatically. We now have a profit of £440. So this gives you a good way of keeping track of where you are in terms of taxable profit. We can record also, if we work from home, some basic use of home as office details. So those are, for example, rentals or mortgage interest, utility bills, council tax and so on. And we can put in there the details that are needed in order to make the claim for use of home as office to work out how much of your home costs you can claim for business. Similarly, we can keep a record of car journeys if we use a car in the business but that's not owned by the business. So we can enter in here any car trips, and if I just put one by example, we can see there that the system just picks up the rate depending on what type of vehicle we're claiming for. Excuse me. Now we have two versions of the spreadsheet. This is the simplified version for sole traders that are not VAT registered. There's a very similar but with slightly more columns and more tabs version, which would be used if you are VAT registered, because it would enable you to claim back the VAT on things, and would also be useful in the scenario of a limited company. There's then various hidden tabs. For example, we could enter in our customer details, put all the details in about Fred, and we could also actually print the invoices from here using this kind of template by saying, okay, this is invoice number 1, and that would be complete with the details picked up from the sales invoice list. I'm sorry, those tabs are probably a bit tiny to see the details of, but the gist of that is there's basically some other functionality that may or may not be useful to any particular individual. So hopefully that's a useful little look at a very basic but very adequate bookkeeping system that you could use to keep your records as a sole trader or a single person limited company. Marika, do you want to perhaps go on to any questions that people have posted up?
Sure, thank you, David. So if anyone's got any additional, I've got 2 or 3 here, so anyone's got any others, please do type them in. One question I wanted to start with was, you talked a lot about the difference between being self-employed or employed and how important it was to get that right. One thing that came to my mind, it's obviously can be a bit of a minefield and sounds like a bit of a judgment as well. So how would one know for sure which one you are? So obviously you can make a judgment yourself based on the sort of criteria that you mentioned. But I think if I was the entrepreneur, I would still feel a little bit unsure as to, well, have I now made the right assumption about my circumstances? How could one be absolutely certain that they've got it right? Can they check it somewhere?
Yeah, that's a really good question. Unfortunately, I don't think there's any specific place you can make that check. There is a revenue site that basically guides you through the same questions, but for first point on that is you're still got to use your own judgment in how you answer those questions. And secondly, anecdotally, in the tax press, that revenue site tends to almost always say that somebody is employed. So that's perhaps not the best answer. I suppose from an accountant's point of view, most of our clients have a kind of unlimited call on us to be able to answer support questions, and so they would potentially send us the details of the situation, and we would be able to say, yeah, self-employed or definitely employed or borderline, as the case may be. So even we see cases where it's borderline and the judgment needs to be made. There is no statutory test, and I don't think there's one on the horizon. It is just a case of honestly looking at who controls the methods of work, is there a substitute, and is there an ongoing obligation. If you, I suppose, are careful about those criteria and make sure there is a contract that puts that in black and white, and the contract must reflect reality. Just a note on that, the revenue have won some cases where the contract clearly says implied self-employed and all of the right criteria were met, but in reality the contract didn't reflect what actually happened, and in reality the payer did control the methods of work. It was definitely one individual and definitely an obligation, so in fact they were employed. But if you make the contract reflect reality and have those criteria in the point towards self-employment, that's probably all you can do. And at least in that situation, if you've documented what your thought process was, in the fairly unlikely event of the revenue looking at your records and deciding you were wrong, you're going to be held a lot less culpable than somebody who's just blatantly said, self-employment when really it should have been employment.
Okay, all right. And is there, so another sort of related question was, is there a time frame in this whole employed situation, or are you immediately at risk? Is there any kind of leeway when you start working with someone that they are more easily considered as self-employed, or is it right from the word go? If those three rules apply that you've identified?
Yeah, it's immediately from the word go, but in practical terms, I suppose this £671 in any month thing is an important level. If you pay somebody for one day, it's unlikely that they're going to meet that level of payment. So in practical terms, no, you don't have to be worried about that. But if somebody's with you for a week and they're paid more than £671, or for any period, and they're paid more than that in month one, then it's from month one that you need to take that decision. Okay.
And again, yeah, lots of questions relating to this issue, because I can appreciate it can be a bit of a grey area for people. So what should one do when you have freelancers who want to be freelancers but potentially could be considered employees? I suppose if the relationship becomes sort of change or shifts, both parties really wanted to be on a freelance basis because the company would not be able to afford to take the person on as a full-time member of staff. So I suppose, what sort of safeguards are there then that you could put in place as the person who's hiring the freelancer?
Yeah, sure. Well, okay, two scenarios come to mind, or two kind of versions of that kind of question. One is if the people potentially are really self-employed, if the situation, rather, in the relationship is potentially really self-employed. So if your freelancers are doing work for you, and they're going off to your clients and providing some kind of service, but it is absolutely in their hands as to how they do that and how they operate and how they write their reports and so on. And if absolutely they could just say, well, it wasn't me this week, it was somebody else who did the work, but I've got my right to substitute. And if absolutely they could just stop the relationship at no notice, then I think that scenario is fine. So you both parties want it to be freelance, it really is freelance, get it documented, get a contract in place to reflect those points, and that's absolutely fine. The other scenario, which is probably more likely answering the question, is we want it to be freelance, but unfortunately in reality it's not. It's actually employment. We actually control how they do this work and how they write their reports, whatever. We don't want them just sending somebody else in places, and yes, there is an ongoing commitment. Now in that scenario there's only two legally sound ways of handling this. The first is just accepting they have to be employees, and that's not necessarily as expensive as all that. It's definitely a lot less expensive than getting caught out later, because the deductions are partly being made from them and partly being made from the employer. The 26% national insurance is basically spread between employees at 12% and employers at 14%. And the rights that attach, I suppose, in some ways are fair enough. They are rights that an employee has, and they're not necessarily that onerous, certainly not in the first year of employment anyway. So that's one way of handling it, is saying to the guys, sorry, you know, yes, you want to be freelancers, yes, we'd like you to be freelancers, but the reality is this is an employment situation and we've got to do things right. We need you to come on to be paid through payroll. And if they've got other jobs and if they've got other employment, self-employment situations, that doesn't matter, that doesn't change the status with you. Yeah. There's another way around it, and that is to insist that they operate through a limited company. So going back to the slide that said, okay, what happens if a limited company is put in place? In this case, you can say to your freelancers, okay, you don't want to be employees, we don't want you to be our employees, what we want you to do is operate as a limited company. And that's certainly what all of the big agencies and consultancies will do. We've worked with lots of big environmental consultancies, and they will say quite simply, every worker has to either be on payroll or operated through a limited company. They're just not interested in making that test as whether someone is employed or self-employed. Now that kind of answer isn't great, because we're saying there, okay, we want the freelance situation, we operate as a limited company, you can't be our employee, we're home and dry. But we've only shifted the problem, we haven't really solved the problem, we've just shifted the problem onto the freelancer. The freelancer then has to, under these IR35 rules, make that same judgment. But, you know, from our social enterprise, from the question asker's point of view, then yeah, getting all of your freelancers operated through limited companies is one way of solving it.
So it would be the freelancer who'd be needing to set up a company that would then be contracted by the current person. Yeah, because it is perhaps is something that you can pick up after this as well separately. There's a sort of few follow-up questions on this, and one kind of very good point to say that I suppose a freelancer, you know, if you run a company, a social enterprise, and you have a freelancer coming in and do some work with you and your clients, then of course they'd never really have full freedom to decide and behave and act in whichever way they like. So of course there are always boundaries, which then takes us back into that grey area of, you know, could you ever actually really have a proper freelance doing that? Because you'd obviously want to be determining what they do when they work with you. So, but perhaps I'll connect you up afterwards with the person who was asking this, so you can talk about the specifics of this case.
Yeah, I'm very happy to do so.
I wanted to ask you something to do with the VAT that you talked about. And here was one example, where the cases where customers are primarily corporate companies and you yourself are a not-for-profit social enterprise, would you then recommend voluntary VAT registration? And what would be the main downsides of doing so?
Yeah, if your customers are entirely corporate entities, well, in fact, what we're checking there is, are your customers VAT registered businesses? But let's assume that's what that means. Then if they're entirely so, then it absolutely makes sense to VAT register from day one. Now, bear in mind that VAT registration has nothing to do with sole trader or limited company status and so on. So It's a completely separate question. As sole trader, you could be VAT registered or not. As a company, you can be VAT registered or not. But if your social enterprise is dealing with corporate entities, then it makes sense to do so. The downside is that you've got to actually submit a VAT return on a quarterly basis, but that's not onerous at all. We charge £120 per VAT return. Okay, so that's a cost, or you can do it yourself if it's a relatively small job. So if you've got a bookkeeping system, you'll have your records to hand anyway. Your submission is made online through the Revenue website, or if you use an online bookkeeping software by clicking a button. Revenue take the money by direct debit, so that's not onerous. So yeah, quite straightforward. And the upside is that using the flat rate scheme, which is often beneficial if your turnover is less than the threshold of 150,000, using that flat rate scheme, then some of the VAT that you charge to your customers, you just get to hold, and your customers you still charge 20% as normal. Your customer still claims all of that back as normal, so your customer doesn't even care or know that you're on the flat rate scheme. But in the meantime, of that VAT you've been charging, you get to keep a portion of it, and for some of our clients, that's £2,000 or £3,000 a year. Does that answer your question?
Yes, by the looks of things it does. Great, very helpful. So that's great. And then one quick question around accountancy software. Which one would you recommend for a small social enterprise and not a sole trader? You mentioned you have an online system. Which one is that?
Yeah, absolutely. We use and strongly recommend Cashflow. For those that are not familiar with it, it's spelled with a K, but all other features of it are perfectly good and sensible. They just chose to spell it Cashflow with a K. And that just works really well. We're completely happy with that system. The only time I'd particularly recommend anything else is if you have a lot of multi-currency transactions and have a multi-currency bank account, then Xero, spelled with an X, is possibly a better system. But Cashflow will deal with basic multi-currency, so if you want to invoice occasionally in euros or something, or some of your costs are occasionally in foreign currency, but all of your bank accounts are in UK sterling, then Cashflow works perfectly well. And if you're not into multi-currency at all, then Cashflow definitely would recommend.
Okay, thank you. Thank you. Hopefully that answers. And I've got one more question, which is quite specific, so it may be that, again, this has to be taken offline, but I'll read it out to you anyway, David, see if you are able to answer. I live in the UK with a self-employed status, but I also have a limited company by guarantee. I am moving to New Zealand in 6 months. I expect to pay other self-employed people in the UK, Europe and New Zealand. Is there anything that changes across countries that I should know about as the payer?
Okay, so if I'm assuming they're the limited company, the limited by guarantee is paying people to do work for it.
Limited company by guarantee, yes.
Yeah. The fact that it's limited by guarantee doesn't change anything compared to any other limited. CICs, limited by shares, charities are all the same for this purpose. They're paying somebody in the UK, that will be exactly what we've just been talking about. If they're paying somebody in Europe, or specifically in the European Economic Area, which is a little bit bigger than the EU, then there may be a requirement to deduct national insurance if that person was an employee, and then pay the national insurance directly to the individual's home country. But there's quite obscure and fairly complicated rules and often overlooked. If they're paying somebody outside of the European Economic Area, so for example paying somebody in New Zealand, then if that person has never been a UK resident and they're doing the work outside of the UK, then they definitely don't have to put that person on payroll. So even though the employer company is based in the UK, if the worker is not in the UK and never has been, then you can pay them without deduction of tax. Now, I can't at all advise on then the situation that arises in the recipient country, whether that's EEA or elsewhere, we only advise on the UK aspects. So the person that's being paid in Germany, Switzerland, New Zealand, wherever, there may be some kind of requirement locally to deduct taxes. Certainly if somebody was, say, twisting that situation, mirror image of that situation, if the employer was out of the UK but the individual was based here, there is some rules that say there still has to be some national insurance charged and that individual has to handle that. But in this situation where we've got a UK employer and the individual is overseas, if they've never been here and it's outside the EEA, there's no UK requirement on the employer, but there may be an overseas requirement. I don't know about.
Okay, thank you for that. And again, the person who was asking that, hopefully that was helpful. If you'd like to talk to David about your specific situation in more detail, then do please get in touch. If you want to, David, put on the screen again your contact details, just as a reminder for anyone who has still got any burning questions or wants to pick up on any of the topics or issues we've covered. I think we probably will close the webinar for now. We're getting to 1 o'clock, a couple of minutes to. So yeah. I just want to thank you, David, a lot again for joining us and sharing what you know and
You're very welcome.
So really appreciate that, and hopefully everyone's find it useful.
Thank you for the invite. And if I just put on screen our website, if you can see that there's a button called Book Now. Any of the participants are welcome to click on that and can book a callback or a Skype. If they'd like to have a meeting at any of the Impact hubs, then that can be arranged just by booking initially a callback, and then we can arrange to have a meeting.
Brilliant, that's great. And thank you everyone who joined us, and wish everyone a great rest of the day.
Yeah.
Thank you.
Thank you very much. Bye-bye.